Mr. Setty, great speaking with you. I want to first allow you to give us perspective on what this means. You're the largest bank in the country. What does this large move, or rather large couple of moves, mean for the banking sector as a whole?
Yeah, thanks for having me on your show. I think the front loading of rate cut, of course, broadly was anticipated by SBI's house view. May not have come as a surprise to us, but obviously 1% CRR cut is a pleasant surprise. That would definitely improve the liquidity and also provide a stand taken by the RBI that a durable primary liquidity continues to be available to the banks, which means that the banks can redefine the interest rate regime, what they have both on the deposits and lending rates, while CRR, as I was mentioning, may not mathematically translate into any lending rate adjustments or deposit rate adjustments, but the mere continuous availability of liquidity is a great enabler for the banks to really take a call on the transmission of the rates.
So I want to talk a little bit about growth, because some part of the objective also seems to be not just GDP but also credit growth. Now, how quickly does the rate transmission happen? And you have a great pulse of demand at this point. Do you believe that demand is elevated at the right price, and maybe an adjustment in pricing will lead to a demand surge and therefore good credit growth?
So the demand currently is varying at various sectors. You know, if you see within the retail personal, we've been having a robust growth in the home loans. I'm sure further impetus is given to the home loan because it's a long-term product, and interest rate generally have a positive impact. Reduction in interest rate will generally have an impact on the home loan borrowers, which means the home loan growth rates will continue to be robust. That is one. The second category of retail personal loans, particularly on the unsecured loan segment, it was kind of muted in the last several months. I assume that, the very fact that the interest rate is softening, particularly overall liquidity position, also is helping us to look at the interest rates. And also the very fact the governor has mentioned that the pain on the unsecured personal loan broadly is addressed. We are also, while our unsecured personal loan portfolio is completely different from the industry, but we understand from the industry that this particular segment is behaving proper now. So that will help both on the unsecured personal loan and home loans to grow in the retail personal. Corporates, yes, I think we have seen a muted growth in the corporate segment. The consumption, which is going to be driven both by the softening interest rates as well as, the tax rate cut up to 12 lakh rupees, is going to put some liquidity in the hands of the people and improve their NMI, EMI profiles. So this is also another reason why I believe that the consumption will drive capital expenditure. Maybe some of the deferred capital expenditure will be front-loaded now.
Mr. Setty, what about, good afternoon, Neeraj here, of course, and what about the next, let's say, couple of quarters? If we know the ECB has been moving lower, but the Fed isn't, would a lot of future rate action by emerging central banks, including India, be dependent on what the Fed does, or would it be independent of that, sir?
So the current action itself shows that India is almost, the central bank has decoupled itself from the overall Fed actions. And I think it's driven more by the central bank's focus, or maybe the refocus on the growth. I think the stance is very clear. They are emboldened by the fact that the inflation is moderate and below 4%, which gives a room for them to be aggressive on the rate cut. So in a way, you're right. I think most of these economies are taking an independent view away from the Fed.
Sir, when does the transmission kick in? I mean, many a borrower would want to know, when does this start showing in their savings to their pockets across loan items, if you will?
Yeah, so repo-linked loans will get immediately repriced in a couple of days. Most of the banks will pass on this benefit. In our case, about 29% of the portfolio is repo-linked, so that gets passed on immediately. And in case of MCLR, it will take some time because it is linked to the deposit, how incremental deposits are going to be priced. Obviously, the monetary transmission to be effective, some recalibration of the deposit rates have to happen, which means that the MCLR also will get readjusted, if not immediately, about in a quarter time.
So as these adjustments happen, you'll of course have some bit of pressure with regard to where banking margins are concerned. And thereafter there'll be a bit of unwind likely because the CRR cut will start taking effect. How much of an impact broadly do you expect? I mean, maybe not just from an SBI standpoint, but even maybe from a banking system standpoint. You expect that to be significant?
So because of the lag in deposit repricing, particularly the stock of deposits, there will be some impact on the margins. But you're also very right in saying that the benefit of the CRR, because 2.5 lakh crore will, improve the margins because this cash is, which is not earning anything at this juncture, will be able to be deployed, which means that initially there will be a reduction in the margins, but will get readjusted from Q3 onwards. This is our reading. So initial margin impact will, I think we should look at the year-end margins, which broadly will be protected in our view.
Point taken, sir. Last question is with regard to unsecured. The governor did mention that unsecured is now in a much better space. Would you largely agree that industry-wide, are you seeing unsecured now completely out of those blues that it was witnessing a few quarters ago?
As I mentioned, I think our unsecured portfolio was completely different. I think we never had any asset quality issues there.
Sure.
But at the industry level, obviously, there were some concerns, but those concerns seem to be, reduced now. We also understand from the industry that the personal loans, particularly unsecured personal loans, behavior has improved. There have been some tweaking of the underwriting standards also by NBFCs and some of the private banks, which had helped in addressing these concerns about the unsecured personal loan. I think we are definitely much better positioned now.
Thank you so much, Mr. Setty, for coming in, speaking with us, and giving us all of that perspective. Always great having that viewpoint from India's largest bank and banker.